Hey, it's Dragon with Forex Hacking Secrets. Hope you're well. Lovely seeing you again after quite some time. Yes, I guess the busy summer was in between, but also as I always talk about, remember about summer. Summer is the sleepy market, but it's been happening quite a lot. So we've been riding those waves as well. But the most important part is what is happening in the summer. It's very important to understand. The summer is time where we have the pattern formation. So we have these small movements, but still very powerful, which I like them to be patient because the main time after the summertime is to trade is September, October, and November. There we have a lot of volatility. The reason why, because those patterns are ready to explode. I promised you in the previous emails that I will be sharing with you one of my top three pairs. And this is one of them. One of them that I'm looking at is the Euro GBP. Very simple as well. Approach that I always have with my trading with style methodology is very simple. In previous mail as well, mentioning about broken structure and missing retest. This is another just example of how powerful that is, understanding what to look for and what to really go for. As you can see, the price from the bottom all the way here, we're talking about here, outstanding. This is 700 pips. And now from here, we're going as well. This is as well another target, which is another 500 pips. As you can see, simple broken structure and retest. But the most important part here is, as I like it, is a step number 7 in my method, which is a trading framework, which is a set and forget. So let's now go inside. Anyway, before we jump into the more details, hope you are finding good setups. If you're struggling, don't worry, definitely you're not alone. We all been there. It's just about understanding what the price is doing and what the price is actually trying to do. That is the whole game about trading. It's not about complicating. As you see, I'm always keeping a very, very simple charts, very clean, because the important part is just to see what the price is actually doing instead of having this, as I like to call it, Picasso paintings with everything. This is now on the weekly. As you can see, we are now looking at the weekly. So we are still at the beginning. We are already in the side of this trade, and many members of the Forex Hacking Secrets community as well already riding the wave. But it's just the beginning. Just the beginning. That means there is still time, and we still have 500 pips to collect, or even more. But what is the important part? The important part is what? The important part is always to look for those high probability trade setups, right? And now we are here in the weekly, and always very, very important to, this is going to be homework for you, all right? I want you to establish the trend, the main trend on the weekly, daily, and the 4-hour. Very, very, very important. So what is the trend on weekly here? Is it downtrend? Is there an uptrend? What is the main trend on the daily? And also for the reason why, because it's does that basic of trading that make a huge importance, huge fundamental importance when it comes to trading, because that's is where you're able to get those set and forget trades when you do establish where is the trend. And what am I trying to say about that? You heard that many times. Trend is your friend, and that is where we are spending quite a lot of time with the price and actually ride that wave. Recently, we had a massive waves in our community, especially riding the GBP JPY. Wow. Buy. Sorry, we were going shorting and actually even buying. So it was a great. And what we're actually doing, we're not riding 20, 30, 50 pips, right? We're talking about 200, 300, 400 pips. And etc. But let's focus now on the top 3. This is my top 3 that actually is happening now. We have plenty of turbulence here on the way, so definitely it will be a bumpy road. We have another structure right here. As you can see, that it would be the first. That would be the first structure to arrive, the first turbulence where we expect for the price either to bounce back down or to break. Right, as you can see, something, maybe the price give us a little bit of a pullback as a bullish correction, breaks, another bullish correction, and then actually continuation to the upside. Something like this we're looking. Okay, so now This is on the weekly. As you can see, the importance, let me now actually show you, that was 14 days ago. 14 days ago, and again, as you can see, that is this pattern. And what I'm always like to look is this break of the pattern. When we have a break of the pattern, what I like to see is this. We have now two options. I establish one area of interest, waiting for the price, or area of interest number two, which is both on the weekly. But what I would like to look as always is this, when the price breaks the pattern, right? I like to see that break and retest. So that's mean I like to see when the price breaks and get back inside to give me the retest of the pattern. As you can see, something like this, that breaks inside and gives me that retest. And this is also what we were actually going for. We're actually going for. Definitely is going to be much clearly visible. I'm going to now delete these ones. Delete this one. I'm going to also delete this. And let's actually show you what I mean by that. It's right here. Right? As you can see, the price broke back inside. And that's what you're looking for. You're looking for this break and retest. So this is also one of our trades. This was one of our entries. And that's where actually all the magic happens. And the good thing about the community, because I have the community as my live journal. I know I journal everything that what is happening. So it's very easy to look for. So this is what the time the price broke out, and that's what we were looking for. We were looking for this potential liquidity, right? Because I'm looking for the bottom. I'm trying to find the bottom. This is also the area of interest that we had. There was one scenario: if the price breaks down, we look for some double bottom support to take in charge, or very simple like this, right? Liquidity SIP, and that was this area of the interest where we're expecting for the price to bounce, as you can see, and the price gives you that key reversal. Those entries that you're looking for. This is our entries, so we caught those waves very, very beautifully, and now this is just the beginning of those waves. And see, this is the waves that takes you all the way. This is those set and forget trades, because they're happening at the bottom. And as you can see, the second part of the trade is break and a missing retest, right? Very, very powerful method. Most of the trade actually tends to complicate it, but it is very, very, very simple. Looking for those entries. And going back to the community, so yes, everything was actually here, and we were looking at this one. That was 8 days ago. Potential liquidity in the game, watching it. So as you can see, and what happened when you establish it, you find that support. You're looking what to for. We had a key reversal here. You see a lot of interesting parts, and that is this beautiful, lovely, area of interest to go long, key reversal, and then boom, then simply waiting for the price to do that. However, the price is not as of yet fully bullish, right? Because it's important to establish the main trend. However, we are the beginning of the potential new trend, and that's what I really like about it. See, when you go to the 1 hour time frame, you can see very clearly what the price is actually doing. As you can see, this was not just a random trend or a lucky guess. You see, you analyze what the price is doing at that structure. You see, key reversal telling you where the price wants to go. But if you don't take the price on a date and you don't spend some time with the price, you will not be able to read the signals that actually is giving you. It was actually key reversal. It was also a beautiful array. This is all entries with a stop loss underneath, because when the structure or the support, we do expect potential liquidity sweeps, right? So there's no reason to be very tight at the bottom, right? You don't want to be that guy or that woman or that girl that stops you out for those couple of 5 pips and then the price just shoot in your favor, right? So definitely be generous with your stop loss, another 10 extra pips, because you don't want to be stopped out. So you see 1 trade, 2 trades. So first, second, third, even here, 4th, and this is the 5th. So actually it's potentially 5 trades if you really trust the pattern and trust what actually you're doing. So it was a really beautiful, lovely catch of this trade. And of course, good things always comes to those who are patient and also who are waiting, right? And yes, and that's where we're at. So I just want to guide you through this. So what are we actually looking here? So when we have the impulse move, I like to look for those bullish corrections, right? We're looking for those bullish corrections, right? Somehow to price to give us what we're looking for, right? In order for me to be comfortably netting the trade. So that's what I'm looking for something that is bullish. In this case, bullish correction. Bullish correction. So anyway, let's fast forward, and that's what you got. When you move to the lower time frame, you get very beautiful, lovely, bullish correction. Did you agree? It's important to understand what to look for, and where to enter. As you can see, set and forget, the price coming inside, giving you as well here the missing retest in a form of, this is the trend line. This is the pattern trend line. I like to put it in a different color so that you understand what we're talking about. So it's this one. If I go back to weekly, this is the trend line of the falling wedge, right? And this is where we were expecting broken structure and the missing retest. And not only that, when you understand what to look for, that is what about dating the prices I've been always talk about. Look at this. Gives you the inverted head and shoulder right there at the bottom. And then if you're really paying a close attention, look at this key reversal right here. Another key reversal right here, because you know what you're looking for. So as you can see, it's a very fresh trade. So it's still opportunity to cash plenty. And what do we have now? So the price broke out of the pattern, and now it's the same process. So the price broke out, and we look for another correction. These ones are my favorite ones, right? If you remember, the symmetrical triangle, this is really my favorite. So that, as of now, was another opportunity right here. Right here. Or in a simple approach that also like it, right? The price broke right here, and we also give you the break and retest, broken structure. As you can see. So that is the recent key reversal right here. I just write it down. Key reversal right here. Is a lovely entry of the symmetrical triangle. So you see the price broke out, impulse move, and start making the correction. So here we also had a beautiful key reversal in a form of a inverted head and shoulders. And the beauty about that is, you see, when you know what to look for, the price really gives you those signals. So you need to understand. And I like to combine them with, few layers of the trading with styles. It's like, as I always talk, it's like trading is like building Legos, right? You put one leg on top of each other in order to get a strong foundations for your high probability trade setups. So as you see, you're going to only see that when you know what you're waiting for. And if I go back right here in this one, right? So you see, this is what we're waiting for, right? You're waiting for this break and retest where it is, right here, right? Looking for the re-entry. Okay, so this is from the phone as I was on the go. See, that's what we're looking for. You're looking for this re-entry. So I see, waiting for that re-entry. So you know exactly what to look for here, right? I'm looking for the re-entry of the broken trend line, falling wedge of the weekly, So very, very important, waiting for the market structure shift on the 1 hour, 4 hours, or inverted head and shoulders at the support levels. Very, 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 very important, right? And that's what you get then. As you can see, this is what you get. Inverted head and shoulders. So it's very, very powerful to understand. So now, let me now show you the bigger picture. So this is now back live. All the foundations of the trades are starting on the higher time frame. I just wanted to give you now a little bit. So this is where we're at, right? We're still not as fully, this I call it still sniper entry. Sniper entry is the one entries that are still not a high probability trade setups. The sniper entry is the one that you enter early and you're able to scale your account. So if I really now go correctly, right here, this is it is. You see, we are right here. So what this means? That the price still can do this. Because we are still bearish, right? And this is a break and retest. However, on the lower time frame, we can see what is happening. So you see, it's very important how the bar closes. So you see, the previous, this is on the weekly, so the previous bar. So here you can see that even more clearly. Right? So allowed me now to delete this. As you can see, we're trading here underneath. Right? So the price can easily bounce back down. But if that happens, I simply position myself again at the bottom, because what we're looking for here, we have a bullish pattern, the falling wedge, and what we are looking for, a bullish behavior, or what we're looking for, the bottom where the price actually can give us. So that means my another area, if the price does continue to bounce back down, right, then I will be looking for this, like this, right? I will be looking for a bottom, or in other words, I will be looking for, what is this, Adam and Eve, right? And that would be then at the bottom, something like this. So as you can see, I will then just reposition myself for the new entries. As the price, usually what it does, I'm going to also be careful, because the price usually also likes to do is to get the liquidity, right? Get the liquidity from all these buys from this side, sweep everybody out, comes back inside, like this, pop, pop, and then continue. As you can see, I would be repeating the same approach from before, counting a potential liquidity, and then I have also the potential retest, and then etc. going higher. And then what would that give you on the higher time frame? Would give you the inverted head and shoulder. So if you're not comfortable trading the beginning of the origin of those trades, right? So don't be here. This is the sniper's entries. Because sniper entries, they involve the risk as the price is still in a downtrend. However, if you're not comfortable getting those ones, what is the high probability trade is here, right here. The reason why, because the price, when the price breaks above the previous lower high, right? This is the one, then this becomes now bullish. And remember one thing, it's impossible to be in uptrend without higher highs and higher lows. So if that means that this is now new higher high, right? So that's mean that this is the higher low. So what the price does in an uptrend, making higher highs and higher lows, right? The price does what? Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. This is how the uptrend is done, right? So that's mean what will be your entry? Your entry would be where? At the higher lows, right? Exactly. So that means we will be looking for the entry at the higher lows. That would be the entry. You see? Trying somehow to connect everything by logic. That would be the high probability trade. So you see, when I started trading, I was always centering either here or super far, but I came to this point is like, but okay, this is the high probability trade. But then I realized that I missed all this move. Right, all this move. So I realized I missed all this move. And then I start focusing on the origin of this behavior, right? I was focusing then on the origin. So now instead of me taking only the trade here, I'll start focusing on this area, right? This is actually then documented right here how we got all those entries as well, the sniper entry, especially this one, right? So instead of me being, what is this? Just to give you the example. So instead of me being 70 pip after, I start actually entering 70 pip before. And that would be the high probability trade. However, then we still have the turbulence. So then this turbulence can still give us a potential bullish correction, which can be the short ones or actually could be the long ones. And then again, right? So what that means, where you would be entering again at the higher lows, that would be the entry, right? Or we would actually have here a potential second retest and then the price going higher. That's how the price moves, right? The price moves in an uptrend as a higher highs and high lows. And then the process would be repeated. Right here, the price breaks the pattern or breaks the structure that we had here also as the area of interest. And then again, you would enter at the R high. As you can see, that is our destination. Allow me to put this back as we had earlier. Okay, beautiful. Does this make sense? So this is what we're looking for. A very simple approach. So let me go back to keep it clean, as I had it earlier. Just 1 second. Very simple approach. And that's what I like when we do the analysis. It's about getting the sniper entry, and now the price comes here and then goes and stops you out. It's totally okay, because now I show you that in this case, all what we are just, the other price is early, because I reposition myself back to this, right? I get stopped out with this, for example. So you reposition yourself again here. It's nothing wrong. And it's very, very important in trading. Give you the secret. When you accept that nothing is 100%, you will actually start making money in trading. What this means that not one strategy is 100%. You don't have to win all the trades 100%, right? The method to the trading with style is that it's a perfect method that where you actually can double your account by being 85% wrong or 80% wrong. Or in other words, you can be only 25% right of the trades. For example, you take 10 trades and only 2 trades are correct. You're going to be still extremely profitable, right? Because when you lose 1%. So in this case, let's say you took 8 trades. This is quite impossible because the entries are very few, right? The right ones. Let's say that you messed up 8, that you suck really, really, really bad, right? And then you get this trade, right? And then you get this trade, this key reversal, right? This one trade, where is it? Right here, right? That we had. It's one trade right here. Right? This beautiful, lovely entry. That is the one that wipes everything. And that is the important part, because you need to understand how everything works, right? So it's all about probability. It's all about a mathematic. When you understand that fully, I'm just going to show you what this means. This key reversal right here, where we had it at the levels of the structure levels, right? At this level. So this key reversal, right? When we take a trade, is this. We have this trade. And that is the set and forget, because this is how you scale your account, right? So let's go now to 4-hour time frame just to get this bigger picture. And we know where is our trade, right here. Right? So this is what, 700 pips. So it's 54%. So it's a big difference when it comes to trading, right? I don't identify myself as a trader catching up 20 pips, 30 pips. I don't find this definition of a trader. That's why we call ourselves Forex hacker, because we hack those patterns, we hack the price, and we try to understand what the price is actually trying to do, and we just let the price go, right? And that's why we don't have only one trade, because we have set, take profit 1, which is the first balance. So you see, it's still giving you 70%, right? Even your actual here is still giving you 11%. So you see all those eight trades that you took, but only it's important part that you take those trades at the area of interest. Okay, lovely. So just want to give this, and that is the very important part, you know. So it's about riding those waves. Recently, we have from one of our actually very good trader in our community, Natasha, has been riding the GBP GPY for 200, 150, 200, even more pips, just mind blowing. And that is one of the trades that are on my top 3 list. I have a couple of more, which I will also sharing this in the next emails. But this is where we're at, right? this is where we at. So allow me now just to do the sum up and to give you the scenarios. So scenario number one is not this. So the trade one is already active, and this is where we at. Right? So you see, we're still operating underneath. So we have a forward here as well. Here we have this break and retest as well. So this is now actually forming a very lovely key reversal as we saw it on the 1 hour time frame and as a symmetrical triangle. Yeah, beautiful. So this is where we're at. So now the scenario number one is this, right? The price goes down. I'm using the previous, I can also use this one, right? Well, this still can give us another entry from here, right? Pam, pam, and then actually go. Then we have a head and shoulder, right? Or the price decides to very lovely continue moving to the upside, breaks to the above, and actually moves higher up. What I pay attention strongly is the pattern, higher time frame pattern, right? And do strictly respond to this. Right? So as you can see on the higher time frame, there is a turbulent zones, right? And now the price can easily do this and continue going lower. So if I get stopped out, it's totally okay. So what that means, if I get stopped out, what I do? Do I go around and look for the miracle? No. I just do what? I reposition myself. Let's say that price continue going lower, right? Like this. So what is my setup? Continues the same. I'll be waiting for the price to enter inside, wait for the retest, and then actually I would actually continue again forward. So you see, I would be looking for this area. And then means what here? I would be looking for the bottom. Well, one thing would be, I would be looking for a bullish pattern as a fake breakout, right? And something like this. As you can see, it would be the fake breakout. Or I would be looking for a double bottom, for example, right? The same thing as we had it before. Or we're looking for something like this. We're looking for the bottom. Does this make sense? Right? Very simple approach. Very simple approach. I would stay the same because I have a bullish pattern. I also have a missing retest. As you can see, broken structure, the price first used this pattern to do the missing retest. We broke it again. So I don't really have this fully recovered this. So if this gets continue going to the downside, I will then just refocusing again. Either you're not comfortable with finding the origin, then you just simply focus on this area, which is the break and retest, or which would be as well this part. As you can see, the price would come down, break back the structure, and come back here, which is as well the very nice junction of the odds actually going in your favor. Right? So that would be the scenario 2, right? So the current scenario number 1 is basically that the price is here. What also could actually happen is this, that the price comes here, as we said, comes to this structure and then gives you the bullish, start giving you the bullish correction, right? It is. And then the price goes back higher. Everything is still, because if you're looking for this one, the price can easily do that. So when we understand what we're looking for, then we're just going to be focusing on our bullish things. And we also talked many times, when the price makes the new low, you draw the line, right? So what do you have here now? Right, and then the price breaks. And then the price gives you the retest, and then the price continue. So in other words, what do you really have? So you see that would be this structure, but if I now delete this, I put it like this, you would have here what? A double bottom. So see, again, what we are looking for, we're looking for the bottoms, right? So that would be another potential scenario, right? So this is this area where we take the opportunity of setting ourselves for the new trade, because the reason why, what most of the trader does, it's going against me, panicking, then closing the trade, and and then only the thing is that the price comes here, and then just and goes 500 pips into the favor. So this is everything on the weekly. We use only the lower time frames to establish our entry, the sniper entry, if that makes sense. So here we still have plenty of time. This is not fully as yet developed. And the reason, what I mean by that, as I have you on the sheet, write this is your homework. Need you to establish what is the trend, right? When you establish that, what then needs the price to do in order to become bullish? That is where all the tricks and secret lies, right? So it's still plenty of time, but as you can see, we are in bullish pattern. What I like to use a lot is the family, right? We have here a brother and sister, or father and son, or the husband and wife, right? As you can see, both of them are bullish, right? So if this is a husband and wife, what you're going to get here? Their children. And their children will be just a smaller correction. Sorry, just a smaller correction. So there will be the little son, right? We're also going to be bullish. Very, very, very important. So this is where we're at. So patience is always very, very, very important. So going back now on the analysis of the higher time frame. So this is where we're at, right? Previous low is this one. As you can see, there's no need to rush, right? The first opportunity to go long was here, was right here. The second was on the break and retest. As you can remember, that was the first one. That was the first one, paying with a liquidity sweep, as you can see, waiting for those areas. And then the second one was here, of the re-entry, right? Which we also established with this concept. Sorry for this one, is from the phone. But as you can see, we were looking for this re-entry on the retest of this area. So that was the second trade, right? So now we're looking for the third trade. The third trade, as you can see, that was it. So now we're looking for the third trade. So the third trade on the lower time frame, we establish it by symmetrical triangle. But on a higher time frame is what? So as you can see, that symmetrical triangle, I like to call it really leftovers. I like to take the origin of the trades, right? So that being said, we're still here. We're still underneath the structures, right? So this is the turbulent zone, right? So if I take the trade here, it's not a high probability trade. So it's okay, totally okay to be observant. That means what? To wait for the price to do its things. Not about, why I should have taken the trade. No, just wait for the price to do this, because the price do what in uptrend? Makes the higher highs and then makes the higher lows. The price will come back, right? But then you have enough information, enough intelligence to confidently establish your new entry, right? Definitely in the lower time frames, that was this entry right here. This is what we're looking for, right? Right here, which is actually as where we are at the moment. But as you can see, we are there. So this is a sniper entry. Am I willing to risk 1%? Yes, I am, right? Because what happens? What happens? The price sometimes does this, like this, and does this, right? So it never comes to do anything, just explodes. Comes right here, it comes right here. And by the time you realize the price is already 500, 300 pips higher, and doesn't make those, small corrections. So definitely, and for that reason, I understand that is possible. And this is where we're at. So we have now the impulse move, and the price is right here at this area. Following a very simple approach from this is now 8-hour time frame. As you can see, the price break something. We're having those entries going in the lower time frames, just looking for those patterns, right? And this is where we're at. As you can see, we have this tiny little pattern, which is a symmetrical triangle, right? I personally never trade lower time frames, never. I only use the lower time frame for those entries, Because when we understand what is happening, in this case, as you can see again, this was our trend. I'm going to put it in a pink so that you understand that this is a trend line, weekly trend line of the falling wedge. As you can see here, we had this missing retest. So that was the main entry. This is now already the leftovers, but it's still, we can add because at the same time, the price broke the structure. So I'm also having this already as a potential new entry. Does this make sense? So trade number one. So we have these trades number two, three, and now potentially sniper entry right here. So this one is actually not that great, but based on a price behavior, yes, it gave us the very lovely entry. So that was the entry. As you can see, very simply following the behavior. But in order for me, or in order for you to understand these key reversals, you need to see the bigger picture, right? You need to understand the bigger picture. And that is what I really like about that, right? I really like that the whole concept of understanding is that using the lower time frames to establish those beautiful, lovely sniper entries. And this is where we're at, opening trades. I really wanted to show you our recent, we had Natasha, that was a 5 days. Let me just find where it was actually first, right here. Was actually